By June of 2026, the stock market was already top-heavy, driven by a massive surge of capital into a handful of artificial intelligence giants. Into this environment, SpaceX launched its initial public offering over 550 million shares and pulling in $75 billion. This bar chart compares that raise to the previous global record holder. The SpaceX IPO dwarfs Saudi Aramco's 2019 public offering of $26 billion, nearly tripling the largest pool of capital ever raised on day one. The market response was immediate. Shares opened at $150 and climbed steadily, closing out a 28% first-day rally that valued the aerospace manufacturer at roughly $2 trillion. Because CEO Elon Musk holds 42% of the company's shares, that single day of trading pushed his personal net worth across a new mathematical threshold, making him the world's first trillionaire. But this dual-axis comparison reveals a glaring mathematical paradox. Megacap peers like Alphabet and NVIDIA generate hundreds of billions in revenue and clear over $100 billion in annual after-tax profit. SpaceX brought in $18.7 billion in revenue and remains unprofitable. The disparity between these earnings and the $2 trillion market cap suggests the market is pricing in a role that extends far beyond aerospace. The foundational layer of the business is logistics. The company manufactures spacecraft and launches them into orbit for commercial clients, the Department of Defense and NASA. Securing a near monopoly on orbital transport is an incredible engineering feat. It generates reliable, multi-billion-dollar contracts. It does not generate a $2 trillion market cap. The second layer of the valuation model rests on Starlink, the company's proprietary satellite internet division. Starlink provides high-speed broadband to remote areas by linking user terminals to a constellation of low Earth orbit satellites. This shifts the company's core identity from a transport service into a global telecommunications network, unlocking a massive, highly predictable recurring revenue stream. A global telecom network is a highly lucrative asset. Yet even with millions of monthly subscribers, the revenue multiples still fall short of the mega-cap tech valuations. The aerospace and telecom segments provide the physical infrastructure, but the valuation is anchored by the acquisition of XI. The master technological plan is to build infrastructure that doesn't rely on terrestrial power grids. They intend to deploy solar-powered data centers directly in space. By networking these orbital servers together, the company is attempting to construct an AI-powered computing ring around the planet, operating entirely outside of national borders and traditional energy constraints. This breakdown chart maps out the company's internal projections for their total addressable market. They estimate their operating industries represent a $28 trillion opportunity. Crucially, 90% of that massive figure is attributed strictly to XAI. The disparity is the point. The core space business is entirely secondary to the revenue potential of the artificial intelligence infrastructure. Investors are paying a massive premium for what they believe will become an untouchable, off-planet AI monopoly. The rockets are merely the delivery mechanism to get it up there. Because of its sheer size, the SpaceX stock is being integrated directly into major indices like the Nasdaq 100. This forces a structural shift in the market. Everyday Americans with standard 401ks and mutual funds now hold direct financial exposure to the volatility of the space economy. That exposure carries significant risk. Massive, heavily hyped tech offerings have a very specific historical track record of early volatility. This scatter plot tracks 30 major technology IPOs over the last 15 years. More than half of those offerings posted negative returns after one full year of trading, as initial market enthusiasm collided with the reality of quarterly earnings reports. The company now carries a heavy burden. They have to execute complex, science fiction-level engineering projects while answering to the intense quarter-to-quarter scrutiny of Wall Street analysts. Regardless of whether the stock price holds its opening surge or corrects over the next 12 months, the orbital economy is now officially a public market, expanding the boundaries of the tech sector beyond the Earth's atmosphere.